The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts, let's have a quick look at what traders are watching. Canadian Prime Minister Mark Carney's Liberals staging a major political comeback to retain power, fueled by a backlash against Trump's tariffs and comments on making Canada the 51st US state. US President Donald Trump says Federal Reserve Chair Jerome Powell is not doing a good job. That was his latest criticism of the central banker. He's also signed a pair of orders to soften the blow of his auto tariffs with a mix of credits and relief from other levies on materials, as President Trump's trade team touted its first deal with a foreign trading partner. Trump also spoke in Michigan to kick off a pair of events commemorating his first 100 days in office, aiming to reassure Americans about the country's direction, as many have balked at his handling of the economy. Well, Nadine Blaney spoke with Violeta Todorova from Leverage Shares for The Trade to discuss the rebound she's seeing in the US equities market.
Yes, we have seen a very resilient rebound in US equity markets, with the S&P 500 rebounding to around 5,500 points, which is a significant rebound from the low that it registered at 4,800 points. However, it looks like the enthusiasm might be tempered in the near term, and we are seeing a little bit of hesitation So I believe until we see a clarity in regard to the trade war, in particular between the US and China, because we are hearing a bit of inconsistency over the past couple of weeks, I believe that enthusiasm might be tempered. But on the other hand, we have reporting season in the US, which is showing some encouraging signs, and we are seeing that investments in AI are continuing as per original plans. So there is some resilience in the economy, and I would love to remain positive, but there would be a couple of key levels I would be watching. So for the S&P 500, I believe we can see a little bit of a rebound to around 5,800, which should most probably act as a resistance, and then see another decline towards around 5,300 points. So I believe it will be a very choppy price action from now. This volatility that we've seen over the past months is likely to subside, and the gains from here are likely to be tempered.
Well, would you say the same thing about the Australian market? I mean, we've had such a recovery since the beginning of April. I was speaking to a guest who said out of the top 100, only one company is below where it was way back on Liberation Day, so-called, at the beginning of April. So what do you see in the charts for the S&P ASX 200?
Yeah, I actually believe that the ASX 200 can actually outperform US indices. We are seeing a very similar pattern with European equities, which are trading very close to the breakout point back in February. And I think the Australian market can see something similar. So we are trading at around 8,070 points now. I believe support at around 7,750. It's very, very solid, and there is a very good opportunity for the XJO to rebound to around 8,400 points. We are in a little bit of overbought territory in the short term, and I wouldn't be surprised if we see a bit of hesitation and a mild pullback from here. However, I believe the Aussie market is poised to outperform this year US equities. So I'm very comfortable to start accumulating good quality stocks on a pullback on weakness.
Okay. Before we get into perhaps some of those good quality stocks, Gold has been an interesting one, and I know you've been very bullish on gold, but it's really been waxing and waning depending on, risk sentiment being dictated by the rhetoric coming out of the US administration. Are you still of the view that gold's got higher to go in 2025?
Yes, I don't want to sound like the perennial bull, but I'm still quite optimistic about gold for 2025 and 2026. There are some very strong tailwinds supporting the price of gold. And I think this pullback that we are seeing is going to be temporary. So I would be watching a couple of levels. So first is minus support at around 3,270, which if gets broken, can trigger a short-term decline to around $3,100 an ounce, where most probably we will see very good solid support arising. I am of the view that the all-time high of around $3,500 an ounce will be broken in the next month or so, and that could trigger a very sharp rally to around $3,800 and potentially to around $3,900, potentially $4,000 by the end of the year. We are seeing a very strong central bank demand. And I think this demand, especially from China, is going to continue this year, and that should support the price for gold. I know that short-term gold is driven by what's happening in the US. All these geopolitical tensions are supporting the price, but that's one side of the tailwinds. We are seeing that the dollar is going significantly lower. We broke the 100 points key support for the US dollar index, which is telling us that the US dollar can drop down to 90 points in 2025, which would be another tailwind. And of course, investor and central bank demand is supporting these prices. So most probably that would be my key pick for investors. And there are a lot of gold ETFs offering yield, but Australia is so lucky and blessed to have so many good quality gold mining stocks. So there is abundance, a big list to choose from, but I would pinpoint again Northern Star, Evolution, Perseus Mining as one of my key picks in the sector. So plenty of gains for 2025.
Got it. Look, Macquarie is a bit of a divisive stock right now because of its US exposure. However, it's been very cheap. The bottom is in, or would you think that the bottom's in? Is there still any value that you can see there in the charts?
I am very comfortable with Macquarie, actually. I think we did indeed hit support, key support at $160, and most probably we will not see the price going any lower. Investors should be monitoring the minor support of $172, which if we see the price declining around there would provide very, very good buying opportunity. But I'm seeing some encouraging signs on the chart, and I think Macquarie is trying to turn the corner, and even around current price levels, I'm quite comfortable to start accumulating. My first upside target is the previous resistance of $206, but I can see the stock trading to around 226 in the next 3 to 6 months. So very happy with Macquarie at the moment.
Okay, and I know that you've got here Pinnacle Investment Group, which I don't know if that surprises me or not. Violeta, what are you seeing in the charts?
Yeah, we've seen a massive decline and retracement from Pinnacle, but it looks like we have hit a bottom at around $13.60. We are seeing some encouraging signs on the chart. The stock have rebounded massively, and I think once the key resistance of $19.36 is broken on the upside decisively, the stock can very quickly rebound to around $22.70, where I will be happy to start trimming. So if we see any short-term weakness in the share price to potentially $16, $17, I will be happy to start accumulating the stock.
Yeah, interesting. Okay, just one more, just in the interest of time. And I have to ask about WiseTech because, as you mentioned, it's been a big week, will be a big week for tech earnings in the United States. And where the tech goes in the States, often our tech follows, whether it's fair or not. Again, where would you be looking to accumulate WiseTech?
Look, I believe we're not going to see a massive retreatment from here. I'm targeting the resistance of $89, which most probably is going to be cleared very decisively within the next week or so. So that would give us initial price targets of around $103, and over the next couple of months to around $122. So anything around $79, $80 presents a great buying opportunity. But if the share price doesn't go there, I'm very happy to buy the breakout. And I believe we won't see a disappointment here. We have a massive gap, which we have to see filled. And WiseTech, I believe, is not going to disappoint investors.
All right, Violeta Todorova from Leverage Shares there. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.